Okay, the balance sheet of a not-for-profit organization looks like this. No major difference. On liability side you have liabilities, on your asset side you have an asset column, but the difference is instead of capital I will call it as my capital fund if it is a not for profit organization. This is one difference, and while plotting a balance sheet please don't write as capital, write as capital fund. The same way, don't write net profit, write surplus. Don't write net loss, write deficit. The third point here is don't write capital, write capital fund. Means you have studied the subject, so you are not writing it as capital over here. Okay, let's take the asset side first. All the fixed assets, building, add opening balance, that is what we generally do. Then we can also less what has gone out and less the depreciation amount, net amount coming outside. Furniture same, opening balance, add additions, less depreciation or less which is sold, one more less can come, and here I get the net amount. Now current assets, cash in hand, cash at bank, and your arrears that are yet to be received, then your accrued interest, all is your assets here. Now investments, building fund investment, all any sort of investment, sports fund investment, these are specific investments need to be put in your assets column. Then prepaid expenses, we know that outstanding expenses are liabilities and prepaid expenses are your income. So prepaid insurance is your asset. Prepaid expenses are your assets. So insurance that is paid in advance is your asset, and then rent which is paid in advance or prepaid is your asset again. So moving on to the liabilities side, one thing what here you can note is assets, that is your this side, minus your liabilities, that is all the liabilities mentioned here, is your capital fund. Point to be noted that once you add up all the asset side, subtract all the liabilities, what will be remaining is your capital fund. Okay, so opening capital fund, add the surplus, that is add the profit, less the deficit, that is less the loss, and net off will be here, and then add entrance fee which is capitalized need to be added to the capital fund, and the main balance is taken in the outer column. Now your building fund, a specific fund, so opening balance is here. Add the donations, the receipt which you have got specifically for the building, and income from building fund investment, any investment of building fund, the income raised has to be added and taken out in the outer column. Sports fund, same way, opening balance of sports fund, add donations of the sport fund, add any investments on investment when you earn or interest has to be added here. And from sports fund we withdraw to make the prizes, so less sports prize awarded has to be reduced, and then the net has to be taken in the outer column. Now your outstanding expenses are my liability because they are due and I have not paid them yet. So any outstanding rent, any outstanding salary, outstanding electricity or water charges, so these are all my outstanding expenses. Subscriptions which are received in advance, now subscription is my income actually, but when it is received in advance it becomes a liability. Okay, so that has to be brought out here, and this is how we plot a balance sheet of a not-for-profit organization. Remember the third point, you will not write it as capital, you will write it as capital fund.